Let's get further perspective on IT numbers, at least two now, and of course there will be two more tomorrow. Sandip Agarwal is joining us to help decode what we've heard so far. He's fund manager at Sowilo Investment Managers. Great to have you with us, Sandip Agarwal. You know, we've started out expecting muted revenue growth from the IT sector for this quarter. The third quarter is a seasonally weak one, but now having seen the kind of numbers that have been posted by both TCS and Infosys, does it reaffirm expectations? What are your largest takeaways from what has been reported? Have we set the tone for IT third quarter earnings with these two?
Hi, good evening, and thanks for having me on the show. So yes, the numbers are slightly better than what was expected, both on revenue and margin front. Although, on margin, we were a little confident that with the falling attrition, the margin should surprise positively. And I think this is the trend which has just started. Next 3-4 quarters, there will be a big surprise in margin with falling attrition. But revenues broadly, were slightly better than what Street was expecting. And I think this suggests that, if you see last 6 quarters, the deal wins have been quite good. And despite that, revenue expectations are going down because of clients postponing the decisions. And I think this quarter is where, if you read this number, it suggests that clients are now at least have stabilized their timelines for decision making, if not reduced. And this is generally typically a beginning of a positive business cycle in my view, because next year the clients must have freezed the budgets, although communication may not have completed. So I think typically in last 20 years, I've seen 4-5 cycles. This generally is a first sign of beginning of a good revenue cycle. You may not see the numbers in March, but I think June and September will be the one where you will see good growth. And this quarter there is slight beat in margin. Next quarter should be a bigger beat in margin, followed by even further better margins in first half of FY25. So I think we will have good margins to start with and followed by good revenue growth.
So now with TCS profit up 2%, Infosys, of course, down 7%. Where should we peg our expectations from Wipro and HCL Tech that are next on the earnings calendar tomorrow?
See, Vikram, basically for Infy and TCS, this quarter is is generally have slightly more impact because of their concentration of geographies. In case of HCL and Wipro, while there is seasonal weakness of US, which is there for everyone, and Europe, but at the same time, Wipro has some benefit of Middle East, and also in case of HCL Tech, there is some benefit of product and platform. So HCL Tech should do good. I think 2.5% at least dollar revenue growth is what I'm expecting. They should report with a better margins. So I think, HCL Tech was always better positioned in terms of revenue for this quarter. While, in case of Wipro, I think while there is some benefit from Middle East and other geographies, but their concentration is slightly low. So I think, there will be a decline of almost 2 to 2.5% on a quarter-on-quarter basis, and in terms of dollar terms, around 3%, because there is a negative impact of cross currency. And while margins should stay, flattish quarter-on-quarter, they should be around what they were in the last quarter, 14.8, or 15% around. So I think in case of Wipro, not many big surprises, but in case of HCL, the number should be quite good.
But in terms of the US business in particular, a lot is being pegged on the Fed cutting interest rates this year. What's the outlook on that count? How will that play out on the wages, the hiring, and the attrition trends, in your opinion?
So, right now there is a sharp fall in attrition. So if you recall last year in January 22, when demand was extremely strong, but attrition has touched almost 25% plus for even the large names like TCS. So it was decadal high attrition that brought down margins substantially by 3 to 4%. I think what happened after that is because of that lot of hiring happened in a panic. And then when there was little slowdown in growth, despite strong deal wins, all these companies did not replace resources that quickly. And also the industry attrition fell. So we are now started to seeing the benefit in the margins. We will see for 2-3 more quarters. And again, the net hiring numbers, if you observe, has started going into negative. So I am just little worried that, again, we will be in a situation where in next 2-3 quarters, when demand recovers, these companies will have very thin bench, very good margins, very good demand, but thin benches, which will again lead to a sharp rise in attrition cycle. And this has always happened because it is very difficult to time the demand exactly as it is at B2B business, and only critical work is done immediately. Rest of the things are always, a factor of how business is doing. So I'm fearing that we will repeat. We should not get into repeating the same thing. The company should probably hire little more resources and take some hit on the margins for a couple of quarters, because with
Yes.
interest rate cuts and demand reviving, we will be again in same situation we were in 2021 when demand was superb,
Yes.
but manpower was not available.
Yes, that is true. But like you mentioned, the deal wins aren't looking too bad. The margin picture is going to improve as we go along in the quarters to come. And of course, it is also important to understand that IT earnings today, we are discussing on a day that Google has laid off hundreds of employees in hardware and voice assistant teams. And now the focus, of course, is going to be on AI, its development, generative AI at that. So it is going to be an important piece to understand how India's IT companies are geared to take on the opportunities and challenges that entire sphere of the activity offers. But that's for the future. Sandip Agarwal, thanks very much for joining us with your perspective on today's IT earnings. We'll continue to monitor them tomorrow as well.